In this video, I'm going to review a trading strategy that I use. I've been using it since probably 2004, maybe 5, somewhere right around there. I'll give you a little history of this particular strategy. So I'm using the CCI indicator. So when I first put together my trading strategy, one of the challenges that I experience, which is what I see a lot of new traders do, they have a tendency, and I did. First of all, looking at a chart with all of the custom indicators and the colors and the way the platforms looked, it was really colorful, right? I'd never really done anything like that online back in 2001 that looked so interesting. And when friends and family would look at my screens and my charts, they'd go, wow, that's like really, really interesting. What are you doing? What's going on here? Like, how do you decipher all that? So I had a tendency to change the settings on the indicators that I was using. This is at the beginning of my trading career, before I even really understood what indicators were doing and what their purposes, what they were for. And so I would change the indicator settings throughout the day, which was a big mistake. And then I would change the colors, and then I would add more indicators just because I read an article that somebody happened to be using an indicator. And of course, in the beginning, I didn't know what I was looking for. I didn't know how to tie that correlation between what I was seeing in the indicator and the price. Now, there's always been the debate that indicators are a joke, it's a scam, it's designed to take your money. I see people post on Facebook and lots of different blogs everywhere. Some people just hate indicators, and that's fine. There's nothing wrong with that. But other people use them and they work really well for them. That's just a fact. That's just the way it works. It's the way the person, the individual, decides to use them. So I've been using indicators, and I don't rely on indicators to tell me what to do. I'm looking for things, right? I'm following the market. I'm watching the news. Sometimes the news doesn't give me any information. News meaning like economic data. There are some days, just based on the commentary of the analysts on TV, and I'm talking about like CNBC and Bloomberg, just the opening, just prior to the opening, things like that. When you watch the London session, just prior to the open, same thing with the New York session. You've got Joe Kernan and all these guys that have been on TV for years and years, and sometimes you can just tell by the tone that there really isn't anything going on that day. And then you can see it in price, and then you can see it in indicators, and you can see it in certain measures, certain things, tools that you use that will give you a gauge of what the market's doing. And I'm not just talking about Forex. I'm not just talking about the dollar. And you can look at the membership site and look at the resources to see what I'm using to gauge strength and volume and momentum and sentiment and things like that throughout the day. So there's a lot of tips and tools. I think a lot of those videos are primarily me talking about how I set up my day with Thinkorswim platform, using stock markets, using indicators, real indicators, index and things like that. So I'm not going to get into that. What I want to talk about though is this particular strategy and why I use the CCI. So I started to study because I was getting different results throughout the day. I was changing the settings, I was changing the timing, the parameters of the indicators, all kinds of stuff, and it was a mess. Every time I did that, I just pushed myself further and further away from actually creating something that was going to develop consistency in my trading. You need to do the same thing over and over again, even if it's the worst thing that you could do. You won't necessarily know in the beginning. Hopefully it's not that, right? Hopefully you don't start off doing something bad. You want to educate yourself with as much information about what it is that you're going to set out and do. But that's the best that you can do is at that moment. You've got to stay consistent, and then it's the only way that you can measure your results. It's the only way that you can duplicate that again and again, 2, 3, 4, 5 times down, and then look back and say, does this even work? And if it doesn't work, if it's the system that's wrong, then get rid of it. But if it's you and you're not following the system and you keep changing it every day like I was changing the parameters, so there was no way I was going to be able to create any consistency or to measure what I was doing to figure out if it was the trading system, the indicators, or if it was just me. It was me. It was my behavior. So I settled in on a few indicators, the CCI being one of them. And one of the key things that I want to share with you before I move on, and you've probably heard me say it many times, make sure that you're using indicators that, if you've got more than one indicator on a chart, unless you're using that time frame and that chart and you're toggling through, like, let's say the 30-minute and the 1 hour, if you're using multiple indicators on a chart, you would preferably like to use indicators that are going to give you multiple forms of confirmation, not two indicators that do the same thing that just give you double confirmation of what you already know. I learned that from John Bollinger. He made a really strong point when he talked about that, and he was talking about how traders tend to do that. They tend to use the same type of indicator that does the same thing on one chart, and then they're hoping that those two indicators there that do the same thing will give them confirmation of a trade that that they're about to execute or whatever they're doing with it. On some of my charts, you'll see two indicators that do the same thing, but I do that to save myself time because I know I'm going to be switching. Now that's for me, for my purposes, but I know I'm going to be switching to a 30-minute, let's say, and then a 1 hour. So one of those indicators would do what I need it to do and give me the confirmation for that 1 hour. And I ignore the other one, right, for the 30-minute chart, and then I go to the 1 hour chart, and then I'll use, like, let's say, the other one or something like that. But I do that to save myself time or space on a MetaTrader platform if I'm limited, right? If I'm looking at one monitor, one screen, maybe off a laptop or something. But anyway, this particular strategy is the CCI, and I really like the CCI, and I spent a lot of time researching and studying the CCI. And the CCI, that whole research led me to a group called the Woody's CCI Club. They're still around. They still have a website. I traded with them for a while, and I couldn't do it. I couldn't do it for very long. What some of them were doing, what most of them were doing, and the ones that seemed to be, chatting and talking the loudest in this chat room, what they would do, and you've probably seen me do this before, so I'll show you real quick here. What they would do is they take their charts, and they would do this. That's the CCI indicator, and that was the only indicator they were using. And they were literally basing their entry and their close on a trade where they would take profits or stop on what they saw the CCI indicator do. That's it. They didn't look at price. They didn't even care where price was. If the CCI indicator did a specific thing, regardless of what time frame they were looking at, they got in or got out. That was it. So some of the patterns that they were using were interesting to me. And this one particular pattern was called the Ghost. It's a Ghost CCI pattern. And basically what and I'm just generalizing here. You can go to the Woody CCI Club and you can look it up if you want to get more detail about it. I do talk about it in other videos in my trading course. But this Ghost pattern, for the most part, is a head and shoulders pattern. And when price or when the CCI line breaks the neckline, that's your entry. Now, you have to be careful about the settings, and there are a few other nuances that you need to be aware of to execute this trade correctly. But what I want to tell you is that when you start using this pattern and you start looking for it, it's very easy to look at what you think might be an HL30, I'm sorry, a head and shoulders pattern, and basically force it. In other words, it may not really be a head and shoulders pattern, and you might try forcing it. It needs to definitely be a head and shoulders pattern. There cannot be any doubt in your mind that it's looking at it. And test it out, because you'll notice what I'm talking about. When you go back in time and you start looking for, and you more or less compress your charts like this to just see what the CCI is doing, I recommend obviously looking at what price is doing here when you're doing it. But when you go back to test it out to see how it works, if you see something that sort of looks like a head and shoulders pattern, but it's not really, it's not a good, clean head and shoulders pattern, you'll notice that those don't work that well. Those are the ones that really would probably fail. I use, and I refer to my trades and my, I guess, final decision or the patterns to be a good, clean, I always say clean, a good, clean price swing, something there's no mistaking it. When you look at it, you're not forcing or struggling too hard to find the pattern. If that's what you're doing when you're trying to find a trade, if you're struggling to identify the pattern, if you're struggling to confirm it and it just doesn't look right, I talk about this all the time. Stay away from it. The minute you think to yourself, this doesn't look right, stop. I know how hard that is. I say this all the time. I went through that. That was one of my biggest struggles. It was so hard for me to let go the minute I doubted something, because I thought to myself, well, what if it works? What if it works? I gotta try. I gotta try. I gotta try. I gotta make money. I gotta make money. Everybody's counting on me. I need to send home money for bills. I gotta do this. What if it works? And the truth is that if you're struggling and you can't confirm it and you take the trade, most of the time they're going to be failed trades anyway, and all you're going to do is lose money. And you're going to look back wishing that you would not have executed the trade. I did that all of the time. So with enough, doing that enough times, it was just like I would sit there and look at myself and think back to everything I was doing and stare at the charts or look at myself in the mirror and think, you are a total idiot. You do this every single time. You know you shouldn't. You're struggling with it. You know that the minute you can't confirm it and it doesn't look clear to you, you take it anyway and you do it anyway. And you always lose money. You can't do that. There's no way to get your money back, and there's no way to create consistency if that's what you're doing. Doesn't work like that. So don't. I know how hard it is, but that should be the excitement of the day for you, not so much in finding what's going on with the trades. I know that's all obviously exciting, and news is exciting, and the way price reacts to it is exciting. It is to me anyway, and I'm sure it is to you. But what should really drive you, what your drive should be, is to be the best you can be. Making sure that you know at the end of the day you did everything you possibly could, your personal strength, everything you possibly could, to make sure that you executed correctly, that you could actually walk away from a trade because you didn't know. That's like some real power there, to admit that you don't know what's going on, to admit that you don't have confirmation, even though you know where price might go, or you can see that it might move up or down, but you just don't have an entry, you don't have a target, and to be able to have the strength to walk away and say, I just don't know, so I'm staying away from it. That is true power. That is power as a trader. That is self-control. That is discipline. That should be your drive. That should be your goal. Doing that over and over and over again, having that kind of power, is what's going to help you preserve capital. It's what's going to help you stay out of the market when you don't know what's going on, and wait for the trade to come to you and then execute. And when you execute, you have total confidence in the trade. It is a wonderful feeling to know that you've executed a trade, there is no doubt in your mind, and it just works. And repeat that over and over again. Now, obviously, you're going to have to wait for the next trade to come around. So you're not going to be able to do that 5, 6, 7, 10 times out of a day. I mean, I guess you could, depending on the strategy you're using. But you get my point. You're going to have to wait for the next one, and then wait for the next one, and wait for the next one. And it's going to take time. So, again, go by those standards. When you don't see, or you don't understand what you see, and it doesn't look right, if it just doesn't look like a head and shoulders pattern here, and you're going to try to use this ghost technique on the CCI, stay away from it. But if it is a clear, there's no mistaking that this is a head and shoulders pattern. And that's basically what I was doing this morning with this trade call. There was a trade where I called, actually I could have called to get into the trade a little bit sooner, but I called for the trade at 1.3920, and then the target was 1.3980. Now, I want to show you a few things. This is where I take things a lot further, a step further than what most people will do. Most people would probably be comfortable with just this pattern, and then they'll have a few failed trades, and then they'll say to themselves, okay, well, sometimes it works and sometimes it doesn't. And then they'll scrap the trade altogether, the concept, the idea, the technique. So I talk about very often how one of my other goals, one of my other drives in my purpose, my life as a trader, is to be right 100% of the time. That is always on my mind. Like, I will make a fist and stand there and say, I'm going to be right 100% of the time, which means I've got to have self-control. I'm going to, this is just all about extreme discipline and focus. I know that it's not possible to be right 100% of the time, but who cares? That is my goal, and that's what drives me to do what I'm going to show you next. So when I learned some of these strategies, they were okay, right? I would learn some of these techniques from people, and it was okay for them that they had some failed trades. But I wanted answers why they didn't work, or I wanted to know how to improve the trade, the technique, if it made sense to me. So the same thing happened with John Bollinger. I started to study the Bollinger Bands, but I kept getting into these head fakes with this squeeze play. And he would say, well, not every squeeze play trade, when you're using the Bollinger Bands, he would say, not every one of them is going to work. You're going to experience some head fakes. Prepare yourself. There's going to be a certain percentage of failed trades. But I wanted to go further. I wanted to figure out a way to improve it. So that's how I developed the continuation breakout trade, by boxing in ranges of consolidation that I could clearly see. I mean, these were definite, no mistaking highs and lows. And then I incorporated the Bollinger Bands with the squeeze play. So with this technique, when I learned this technique, I thought to myself, okay, well, this all sounds good, but some of them are failing. Like, how do you improve this? What do you do? Nobody really had any answers. So what I do is, and I'll show you this here. I'm going to tighten this up. So this is the 1 hour time frame. Okay. And obviously we're looking down here at the ghost pattern, and you can see exactly how it worked. Entry at 39.20, target at 39.80, psychological level. These are targets, right? These are psychological targets, levels that I trade to. You know that by watching my trading course. And the reason that I'm going to use these psychological levels here is because there is no clean, clear price swing that I can use the Fibonacci tool to measure an extension target. So in a situation like that where I don't have that price swing to use the tool, the Fibonacci tool, then I'm going to use these psychological levels. And then I'm also going to ask myself, how far could I expect price to go today, right? Considering daily average trading ranges, that is something else to take into consideration. But we're trading inside of this trading range. It's not like I'm waiting for a new breakout or extension or something like that after it's already covered 120 pips. It's nothing like that. We're trading inside of this range. So everything is good. You'll notice that there's also a specific moving average. Now I have some moving averages in here. You can go to the membership area to identify which time frames and things like that I'm using these specific indicators. But every one of the time frames that you look at, the 1 hour, 4 hour, and the daily, they're going to use a different moving average, and they do help. They do help. They give me, it's a visual cue. In other words, so quickly when I'm looking at something, I'm looking at a chart, I visually can see these little indicators. They don't make my decision, but they help me form an opinion. And then when I start getting in here and start doing investigative work here, which I'm going to show you, then it all comes together. But visually, when you're scanning through and you're quickly looking for trades, you want to be paying attention. It's almost like a mental checklist of what I'm looking at. So that's what was going on here with these take profit levels. So this trade is done, in my opinion, and I let it go. I'm going to be looking for the next opportunity. I'm done with this trade. Great trade, right? So we move on. But how did I find out? How could I increase the probability of this ghost head and shoulders pattern actually producing these results, right? Instead of using a head and shoulders pattern, because if you roll the charts back yourself and you find some of these head and shoulders patterns, you're going to see that some of them just fail. They don't work. So here's what else I'm doing. This is my technical analysis. This is the 1 hour time frame again for the pound dollar. There was a clean, clear price swing. This high last week, or actually earlier in the week, right? That's the 16th. Yeah, last week. So we had that high and then that low. That's my new A high, B low. Now again, if you're watching and going through the trading material and my membership course, I am a huge fan of using this A-B price swing method. It's simple, it's clean, it makes sense to me. There's Elliott waves, there's all kinds of different theories, all kinds of different strategies, and a lot of them can become really extremely elaborate. And when you throw these indicators up there, some of these other techniques, they look awesome on the screen. Impresses your family and your friends. But that's not what I'm here to do. I'm here to make money. I want to make this as easy as possible. That was one of the other things that I was doing when I created my trading system. I kept telling myself I need to record everything and write everything down and make it as easy as possible. Not only for me to be able to repeat because I want to be trading for the rest of my life, but if something happens to me one day, I wanted my children to be able to pick up my manuals and watch my videos and go, I think I see what he's doing. I'll watch these videos over and over enough times to see what he's doing. I understand he's making it very clear, very concise. So this ABCD price swing method is what I use all the time, especially here on the 1 hour, 4 hour, and daily charts. And you'll notice here when I use the Fibonacci tool, I'm a huge fan, if you follow my techniques and my strategies, of these extension targets. They repeat over and over again. And I say that all of the time. That extension target down there, based on the depth of this retracement, right? One of the first targets I'm going to be looking at is this one here. This one hit the 50, but all of the candle bodies remained below the 382. So I was okay and understood that this was probably going to be a retracement. Now you could also go with that low and that high and look for the retracement on the way back down. And sometimes they start to converge. That makes a support or resistance level even more significant in my opinion. It sort of solidifies those areas. Anyway, on the way back down, this was my extension target. So at this point, what I'm going to do is that level right there, that support low is approximately 1.3916. Now this morning as price over here was approaching this extension target, I sat and watched to see how price and these candles were holding. And you'll notice that, again, it's a pretty significant support level. None of the candles closed below that support level. Please keep in mind, that the next time you try to do something like this, or you find a price swing and you're trying to identify a bottom and it blows right through it and keeps going, it may not matter, or you may not be using the right support and resistance. I can't tell you because I don't know what it'll look like. Every time they're going to look a little bit different. It is critical that you understand and know where to place and use this Fibonacci tool if you're going to look for extension targets to either find a price take profit level or an area where it's probably going to find some support and bounce in this case, and then find a trade to trade the opposite direction. So things were lining up correctly for me. I saw this extension target down here based on this price swing. It was obvious, it was clean. Everything continued in my favor, right? Lower lows, lower highs for the most part. That trend continued down until it hit that extension target. These extension targets and this Fibonacci tool, the way you use it, it is so predictive and works so well for me. It's something that I've used since the very beginning of my trading career. I mean, I can't say enough about it, but I know that it's because I gained this expertise by using it over and over and over again, but understanding how to use it correctly. That was really the key to it. It's not a matter of just throwing up the Fibonacci tool somewhere on a price swing and then hope that it's going to produce, a target that you just immediately just jump into and trade. Make sure you're using it at the right levels. You've got to learn how to use these tools correctly. That's the key. I spent a great deal of time understanding what these indicators and these tools were for, and then I tested them out and made a lot of mistakes with them. I made a whole lot of mistakes, lost a whole lot of money because I wasn't using them correctly. So I use my technical tools and things like this to identify the support. It's also a psychological level, and then I was also confirming it with this let me open that up. Sorry. This ghost pattern, this head and shoulders ghost pattern. Now remember, this isn't going to happen every day. It's not going to happen every week. It's not going to happen on every time frame. But it works, and it works just like this. So it's worth understanding it. But remember, with some of these really interesting techniques that you might learn on someone's blog or website, you're not going to get the full picture. And sometimes even they understand that there's going to be a percentage, a considerable number of failed trades. But I'm always looking to improve. If I'm going to use something, I want to improve it. I want to figure out ways. So I skip on a lot of these ghost patterns that I see because things don't line up. I'm still looking for specific price levels. So remember in the beginning when I told you that I joined this Woody CCI club, these guys would just trade off of this pattern like this. And they weren't looking at and trading off of key or critical support or resistance levels. And I do. I need more confirmation. I need multiple, it's like when you're piecing together and you're doing some investigative work, you need more confirmation. You need more proof. You need more data. It's gathering this data. It's following along. So it's like stalking. I keep saying that. It's like stalking a trade. I'm following along as price is moving. At one point, it looked like maybe it was going to be a breakout trade to the downside, and then it was pretty clear what was going on here. So even with everything that I'm talking about and everything I'm doing here, occasionally there's going to be a failed trade. But I know, again, back to what I was saying, trying to be right 100% of the time. And this is all part of it. Doing more work than just taking somebody's simple strategy and trying to apply it. I'm doing a lot of work here. I'm not even going to go back into drawing this one here because then that's going to be a whole nother video lesson on the Fibonacci's and the convergences and things like that. But anyway, you get my point. And I'm also using, in very many cases with this technique, the Bollinger Bands. Today, it sort of helped me, but I was also looking at the 4-hour and the daily. And this technique, this CCI Ghost Pattern, head and shoulders pattern, also works on the 4-hour and the daily. As a matter of fact, in the chat room, last night, we took a ghost pattern on the it was the dollar yen to the downside after it peaked. I was during the Asian session before the London session began. We traded it back down. And it results in like 20 to 40 pips sometimes, or 60 pips in a situation like this. The other issue is that you need to make sure that you're finding and identifying a realistic profit target. Realistic profit targets. I've been saying that for years. Realistic profit targets. Don't be, looking at a trade like this thinking, okay, well, what happens if it goes all the way back up here? I want it to take out this high. It's going to bounce. Maybe it's going to go. Don't do that. We're looking for realistic profit targets. We're day trading here. No mistake here. I'm day trading with these techniques. I do swing trade. I look at the 4-hour. I look at the daily. Many of you do. But when I'm day trading, I want to lock in profits. If I'm going to sit here 8 or 9 hours, if there's a trade, I need to find a realistic profit target so I can get paid. I want to get paid. So I hope that helps. In the next video, I will be talking about the ghost pattern and then showing you the ghost pattern on the larger time frames like the 4 hour and the daily. You also want to make sure that you're using the CCI using the correct setting. That's a big factor. Remember how I talked about in the beginning of this video how I would change the indicator settings like throughout the day? Like every 15 minutes I would change it. It was like ridiculous. It wasn't making any sense. But this one, you know this if you're using my trading system. The CCI is set at 14 on the 30-minute and the 1 hour chart. I set the CCI at 20 on the 4 hour and the daily chart, and that's it. I don't change it. I don't leave it. I know that there are other strategies that involve changing the CCI, but the way I use it consistently to repeat everything that I'm doing year after year, this is the time frame that this is the setting that I'm using for this time frame.